All right, let's do it. It's the Part-Time Trader here with the second in my Complete Guide to Technical Analysis series. Last time out, we looked at support and resistance. If you haven't seen that video, I definitely recommend that you go back and check it out. Today, we're going to look at pattern trading, and I'm going to be taking a closer look at pattern trading in the context of the cryptocurrency market, but many of these principles can be applied to other markets such as Forex, equities, etc. I am going to be drawing on about 10 years of obsessing over charts to help you understand how much emphasis you should place on patterns when devising your trading or investment strategy. So if that sounds like it would be useful, then do stick with me over the next 15 to 20 minutes as we dive back into some charts. Please hit the subscribe and the like buttons to help me grow the channel. I massively appreciate it, and hopefully that means I can bring you more content like this in the future. Before I get into the charts, just a casual reminder that nothing you see on this channel constitutes financial advice. I am merely sharing some of the kind of learnings that I have developed over the last kind of 8 to 9 years of, like I say, obsessing over charts, and hopefully some of this is useful. It's designed for entertainment purposes. If you do find it entertaining, then please hit subscribe, and I will bring you more of this in the weeks to come. Right, where I wanted to start, right? I think there are lots of patterns that get thrown around on X, and obviously, technical analysis has become a pretty big business. There are people who have hundreds of thousands of followers, sometimes millions, who hang on their every word because they believe they've got some unique insight on the market that will help them to develop better trading strategies. And look, there are some really good people. There are some great accounts out there, the likes of Trader XO and Besser, to some extent Trader SC. There are some really good people out there who have clearly become really good at technical analysis. I think I have a pretty decent hit rate, and I know I've had lots of compliments recently for some of the TA that I've been producing. But there are also some accounts out there who rely heavily on what I would call pretty basic patterns that almost any trader learns in the first week of looking at technical analysis. So when you begin to think of technical analysis as a tool that will help you with your kind of trading or investment strategy, you start by looking for patterns like this. So you will look for symmetrical triangles, heads and shoulders, channels. There will be 3 or 4 patterns that you will see everywhere, and you'll get really excited because you will be led to believe by some of the big accounts on X that simply drawing a couple of lines like this on a chart can lead to riches. Now, in my experience, these patterns often have, particularly those that I've just mentioned, some of the more simplistic ones often have a very low hit rate. They often trap people into positions, short or long, that then end with them basically blowing out their capital, losing whatever funds they've put into a trade, particularly if they are trading on leverage with perps and futures in crypto. So the health warning that I would place on some of these patterns is that it's not that they don't carry any usefulness whatsoever, but you just have to treat them for what they are. They are one signal in a very complex world of price action. And if it were as simple as drawing a couple of lines on a chart and waiting for price to go up, then everybody would be making money, right? And there would be no market. And what you'll find is, if you look at an asset like this, so you take the XRP chart, is people will start calling this a flagpole, and this will be seen as a kind of pennant or a symmetrical triangle or a bull flag, and people will paint these lines, and they will say that once we break out of this symmetrical triangle, we can expect a move to the upside that is the equivalent of the move from the origin. So if the origin is back here, this move to the upside in theory will be replicated when price breaks out. And we've all been guilty of looking overly optimistically at assets that we're bullish on, that we want to go up. But this kind of trading, entering here and expecting price to go up here with no risk management, is basically just suicidal. You will get blown out you'll get blown apart in the market if you think that really simplistic strategies like this can be applied with little risk management. It's just not going to happen, guys. I'm really sorry to say, but longing on the breakout of a symmetrical triangle is fine, but you need to be thinking realistically about what is my upside target, how do I manage risk, and where do I take profit. And for me, if I was trading this, a good place to long would be either the breakout of the symmetrical triangle or the backtest of the downtrend that has been capping price for a month or so. And once I'm in a position, I'm thinking about two things. One, how do I manage my risk to the downside? So clearly a daily close back beneath this trend line would be the invalidation that tells me to get out of the market. But equally, on lower time frames, it's possible that you get wicks back below this trend line, former resistance, potentially turned into support. So I want to allow enough flexibility for wicks, price to temporarily drop back into this zone before getting eaten up by buyers. But I also don't want to leave so much flexibility that if price moves against me, and it can happen rapidly in the crypto market, that I get caught with my pants down and I lose all my capital. So I would be thinking about placing, if I longed the kind of retest of this zone here, I'd be thinking about placing a stop loss back beneath the previous lows. And certainly any daily close back under this trend line would mean, for me, the trade is short-term invalidated and I'd be getting out of longs. And if I were thinking about where to bank profit, rather than what lots of people do on X, which is call for a massive move to the upside and targeting $14, which is what people would have been doing off the back of this chart, I would be thinking, right, where is a sensible place to start banking profit? And for me, these highs here would be one place. So I'd be thinking about at least taking partial profits off the table here. And as price begins to move in the direction that I want it to, I'd also be thinking about bringing my stop loss up from here back into break-even territory. So as price comes back up here, I'd move my stop loss to break even, which means at worst, I end up breaking even on the trade. At best, if I take some profit up here and I move my stop loss to break even, then I'm guaranteed to bank some profit on this trade. And if you wanted to be optimistic, I mean, look, I wouldn't have a clue how far up this is going to push. But if you wanted to be optimistic and you felt that price was going to push up higher, at least taking some profits and managing your downside risk reduces the possibility that the trade ends up running against you, when in fact you were at least partially right by recognizing the breakout and a potential move to the upside. Now, interestingly, these highs here ended up being flipped into support here. But look at what happened afterwards. And this is why I'm always so cautious when it comes to pattern trading. You long the breakout here, you're anticipating price is going to go up much higher. And after a couple of weeks of chopping around above the highs, price in the space of literally 3 or 4 days completely rolls over, comes all the way back into what previously would have been this symmetrical triangle and wipes out all of these lows here. And this is where the concept of liquidity is really interesting, because each one of these big wicks on these candles represents buyers stepping into the market. And what normally happens is, well, I say normally, what can happen in crypto is that if you've got lows that remain untested or unswept, see, each time price has been bought up, it hasn't taken out the previous low. I often think that that leaves price in a vulnerable space where at some point, all of the longs that have built up beneath these lows, all of the stop losses that sit under here from people who are going long on a really obvious pattern like a symmetrical triangle breakout, all of these are ripe for being taken out at some stage in the future. And that's exactly what we got here. Price began to flip this area into support, but eventually when it gave way, we saw a massive collapse that just took out all of this liquidity. So that's personally how I see symmetrical triangles. I'm not saying they're completely useless, but I would be really, really tight on my risk management and on how I think about banking profit. And if you're not, as you can see, if price goes against you and you've got so many people long in this breakout, lots of liquidity building up here at these lows, you know, you can get, particularly in the crypto market, you can get these really rapid moves to the downside where in a few days you see a move which is, you know, 45% to the downside. And only in the crypto market, well, not only, but, you know, often it's only in the crypto market that you'll see that kind of price action. So be careful if you are thinking about trading. And, you know, while the purpose of this channel is to not give financial advice, a bit of advice that I would give anybody is, if you are going to get into trading, based on my experience, just stay away from leverage. I know it's really tempting, but in the early days, I spent so much time sitting up, staying awake all night because I had opened a trade on leverage that really had no proper risk management behind it. I didn't know what I was doing. I hadn't been trading long enough. I wasn't able to turn a profit. And yet I was touching leverage. You know, I was almost putting steroids behind each of my trades. And most of them were bad trades, or at least even when they were good trades, they turned into bad trades because I just didn't have any risk management set up. So just be careful. You know, these pattern trades are often looked at so optimistically by people who are new to technical analysis, and so often what you get is a breakout and then price completely rolls over. And if you were somebody who was really bullish back here on XRP, you know, you look at the origin of this breakout back in January 2025. Here we are in July, and what has price done? It's just completely gone sideways since then. Yes, there's a fair bit of volatility in this range, but if you were chucking everything into longs at this stage, you'd be really disappointed now, because price has literally just gone sideways for about 6-7 months. There is another pattern that I see getting thrown around an awful lot on X, and that is this one here. It's an old favorite of many people, and it is neckline, shoulder, head, shoulder. And this is called a head and shoulders pattern, often a head and shoulders top you'll see it referred to. And the principle of this pattern is really simple. This neckline here is support, and at some point what you end up seeing is a small bounce, a bigger bounce, a smaller bounce, and this will be called the left shoulder, this will be called the right shoulder, and this will be called the head. And in theory what happens is the breakdown of this neckline here leads to significant downside. From a technical perspective, the theory is that the downside should be equivalent to the gap between the neckline and the top of the head. And so on this particular trade, in theory, when this broke down here and price started to hold underneath these lows, this support zone, this neckline, in theory price should have come back to the 117 region. But what happened in reality was very different. I've talked previously about this concept of liquidity, that when you see these big wicks to the upside and you see formation of a really key level where price is being supported many times at this level, what happens is people get confident, longing from support, and lots of liquidity builds up in this region as people's stop losses are placed underneath some of this support level. And what happens is, as price breaks to the downside, everybody suddenly starts panicking that the support is broken, and we get a flush of all of these longs. Now here is where lots of people start to turn bearish, because they can see the support has given way. They've learned to look for head and shoulders tops. You'll have a lot of the pattern traders on X, people like Peter Brand and others, will be posting charts like this, And in my experience, what happens more often than not is you see some sort of fake out or false breakdown beneath the support and resistance zone, and then price reclaims. And then you get something happens quite often the other way, where people see the reclaim as super bullish, and as you can see in this scenario, price has just gone sideways for months on end. So again, I'm not saying these patterns are totally useless, but in my experience, particularly in the crypto market, I think the failure rate is pretty high. I think these are the types of patterns that people look for when they begin trading, and over time you learn that these are overly simplistic, that often liquidity builds up beneath key levels, and that trading a breakdown or a breakout often doesn't deliver the kind of profits that you're looking for. And in many cases, if you were short back here, you'd be trapped as price broke above. So again, not entirely useless, and could definitely play some role if you are careful with your trade management in helping you to find entries and exits. But I would say more often than not, when everybody can see the same pattern, and that is often the case with a symmetrical triangle or a head and shoulders pattern, more often than not, I would not place a huge amount of emphasis on some of these patterns. But there are patterns in the cryptocurrency space that I do really like, and that have got, in my view and in my experience, a pretty decent success rate. And one of those patterns is what I'm about to show you here. And this, I think EXO calls this a clearance thrust. I've heard it called other things. It's almost like an inverse sort of bump and run bottom or a bump and run top. But the principle is pretty similar. The principle is pretty simple, I should say. And that principle is that when you see price repeatedly bouncing from trendline support, and this isn't unique to the cryptocurrency market, but I see it more often in the cryptocurrency market than anywhere else. What tends to happen is that this trendline support holds for such a long time, and people really get sucked into waiting for the breakdown so that they can begin to short it. And often what happens is you will get something like this, a sort of false breakdown under trendline support that traps a lot of people, and on the daily or the weekly time frame, eventually you get a major kind of thrust to the upside off of the trend line. So this trap doesn't always happen, but the simple principle for me is, if I see price compressing against the trend line, I would not be quick to short this formation. I think going short, because trend lines in theory get weaker the more times they're hit, is often a recipe for disaster. And instead, in my experience, longing at the trend line can be a really, really simple strategy with very clearly defined risk. And so at any point during this move, you could have longed trendline support and you would be in profit. And the people that are waiting for the trend line to break or to break down because it's been touched multiple times would then have to sit in their shorts as price completely rocketed to the upside. And as we know, cryptocurrency markets are volatile. So longing here could have delivered 266% returns. Now, would you know to exit the market at that specific point? Well, potentially, actually, because if you look at, you can't find it, there isn't enough price action history here on Binance, but the previous high was up in this region. So potentially targeting the previous high from 2017, 2018 might have been a sensible strategy. But I suppose I would think about this much more simply, and I'd just find a zone to take profit and at least partially take profit and continue taking profits on the way up. Now, at some point, remember, I've said liquidity starts to build up and none of these lows have been taken on the way up. So I think healthy price action looks a bit more like this, where you get lows taken. You know, you think about all these lows that have built up here, people constantly longing support here, and then you get a swipe of all of those with price action here. To me, that looks like a much more healthy market for sustained upside. When you see lows repeatedly not being swept on a move up, eventually I do expect these lows to get taken, and I expect price potentially to go back to the high, and eventually to come all the way back down and take these out. But in the short term, there is a lot to be gained potentially from longing trendline support and taking profits on the way up. And I just don't, you know, the thing that I had to learn the hard way is just not to get too carried away when price starts to move in the direction that you want it to, particularly if you're trading on futures and on perps and you're using leverage. You know, anticipating that a move like this is going to be sustained forevermore, and that this is going to be a 10 bagger for you and you're going to do 1,000% returns in one trade. That is not how trading works. So taking profits, making sure you bank them when they're available is important, because there will be other trades that you won't make a profit on. And if you turn your winners into losers alongside your losers that are losers, then boy, you know, you're not going to last very long in this game. So this is just one pattern that I look out for regularly: a clearance thrust with price bouncing consistently along trendline support before a massive thrust to the upside. And the same can be said in reverse. So if I just inverse this chart, quite often what you'll see when it comes to a market bottom is that you'll have price being capped to the downside, and then you'll get a big thrust to the downside, which takes out all of the bulls before price reverses, and then takes out all of the bears that were shorting along this trend line. So it works both ways. But this has been a pretty reliable pattern for me over the years in the cryptocurrency market in particular. And there is another pattern that is similar in nature that I really, really like, and that is what is often called a bump and run. And you can get bump and run tops. You also get bump and run bottoms. And the principle is really simple. That is that you get this kind of what is called a lead-in phase. So you get a small kind of bump, and then the 2 points between this high and this high here begin to form the early stages of a trend line. And as price develops, you get what is called lead-in developing into a big bump, where you get a much bigger swing to the downside and a much bigger gap opens up between price and this trend line. And then you come back to hit the trend line. You get some sort of consolidation often. But what happens is when this breaks, that is sometimes a signal that price is going much higher. Now, from a technical standpoint, your target on a bump and run is often the origin of the move, and that would be this point here. And it's really interesting that price started reacting to this level perfectly as it began to hold as resistance for many, many weeks. But just look at the size of this, and I've posted charts where I'm kind of looking out into the future and I can see similar patterns forming on some alts that I expect will bottom at some point in 2026 or 2027. And I think there is huge gains to be had from finding these types of patterns. Now, interestingly, Mantra, I mean, just this move here, if you were longing the breakout up into the previous high, that was a 36x return. Now, obviously, particularly if I was trading on leverage, I'd be thinking about taking profits along the way. But if you were really bullish on this asset and you wanted to find an entry, then the break of this downtrend was massive. Something like 430x delivered from the bottom. Now, I didn't catch any of this. I wasn't watching Mantra at the time. But now that I've seen this and I've seen the kind of explosive power that this pattern can produce, and it's not just here, I've seen it in the Bitcoin charts, the Ethereum charts, albeit not as impressive in terms of upside delivered. But I think this type of pattern is one to look out for, and it's the type of pattern that, you know, most traders who are new to the space will not be looking for in the same way that they will with a symmetrical triangle or a channel or a head and shoulders. This is just a little bit more complex, only insofar as most people massively underestimate the kind of power that this can produce. So yes, many people might see the trend line break and think this is a good entry, that's fine, but I think most people would underestimate the kind of upside that can be produced by a higher time frame bump and run pattern. So this is definitely one of my favorites in the crypto space, and there are lots of examples on my feed over on X of alts that I believe are in the early stages of painting some sort of bump and run bottom, and I expect over the next couple of years we will get some great entries on those. So that's one pattern that I really love. The other pattern, and this is, so if I had to pinpoint my three favorite patterns in crypto, the first would be this clearance thrust pattern, which is a short-term kind of swing trade, but potentially can produce really great results if you manage your entry and your risk and you take profit in the right places. The second would be this bump and run, and the third would be the descending broadening wedge. And this pattern, honestly, I cannot tell you how much I love this pattern, because I have found that particularly on higher time frames, so on the weekly, sometimes the monthly, 3-day chart, I have found that this produces fantastic results and is pretty reliable in terms of success rate. But also, what I love about it is that if you're somebody who enjoys a good liquidity hunt, what I talked about previously, where people were longing off of some of these lows, and what happens is lots of people start to place their stop losses around these levels where they perceive that support is. And when you get a really good flush, as you often do with this kind of pattern, where price is making lower highs and lower lows consistently, when you get a really good flush, that often wipes out a lot of the liquidity and the sort of the longs that have built up in this region, and it often means a much bigger move to the upside. And so there's a couple of ways that I would think about playing a chart like this. The first would be, depending on how clearly defined the lower boundary of a descending broadening wedge is, and it's not always easy, like this looks easy in hindsight to place a line here because you've got this really clear distinct low, but previously we wouldn't have had that much price action to work with, right? And so it wouldn't have been obvious to you that this was a descending broadening wedge, and it's unlikely that you would have been able to pinpoint this low. But I would have thought about going long on the sweep of this low here. So price comes down, is rejected from this sloping downtrend once again, rolls over in a really big way, and you see this big move from 70k down into 49k, 30% downside in a matter of days, big flush of all the longs, delta on high block heavily red down here as lots of people pile into shorts. And what happens is price bounces hard and you see a reclaim of this level here. Now, I think the small consolidation that we saw here, or the retest of this area that we saw here, either one of these would have been a great entry for a long. And if I were longing here, I would have placed my stop loss just beneath this low, and I would have done the same thing on the back test of this zone here too. And what you get is asymmetric upside here, because yes, price could come back down into this region and maybe you are stopped out for -1R. But if this pattern delivers, you can get really big upside. So long here delivered 100% move over the next couple of months. Now, you can debate, would you have taken profit up here? How would you have known? How would you have pinpointed that zone? We haven't got time to go into where I would have been taking profit on this trade today, looking at the higher time frame chart. Actually, I tell you what, let's do that just really quickly. I would have been looking for something like this. Now, it's very subjective, right? Because this trend line, you could probably draw it in a number of different ways, but the number of touches on this trend line here tells me that somewhere in this region is a level of resistance that might make for a good profit taking zone. And that's exactly what we saw. Price moved back up to the trend line, and that would have been a good area to take profit. But regardless, remember, you don't have to change your life in one trade. That's the thing that has been painful to learn for me over the years, but it's really important that you take profit. So as we got this breakout, there's three areas I would have longed. One would be here on a sweep of this low. The other would be here on a retest of this support and resistance zone. The other place that I would have longed would have been here on a back test of the breaking of this downtrend. So downtrend gets broken, and then price comes back and back tests it as support. And this consolidation here, this entire consolidation here, just gives you so many opportunities to think about getting long now that we've broken out of this downtrend that was in place for, gosh, nearly a year, from March 2024 until October, November time. So not really a year, probably 6-7 months. But, this is a big old period of consolidation, and longing on the retest of this downtrend break could have been a great strategy. And I would have been taking profits on the way up, because I'm not psychic. I don't know where the market's going to top out, and I might have had a clue if I had looked at this downtrend here, but lots of people might have missed that. I would simply be banking some profits on the way up and then deciding not to get too greedy after a 100% move from the low to the high. And this pattern works on multiple time frames. So that's the daily BTC chart, but look at this here. Look how clean this is. This is Solana BTC, and again, there are a few ways that you could draw this, but I just love the look of something like this. And I remember back in 2023 drawing this chart and thinking Solana was going to absolutely explode versus Bitcoin. And lo and behold, when we got this break and this retest here, and this is what really tests people, right? You get the breakout and everybody's bullish on the breakout. And then what happens is, after this initial burst of optimism, price just consolidates for weeks and weeks and weeks. And this was from July to September. So this was 2 months of consolidation, a back test. Everybody starts to think this might be a fake out. Price is going to break back under the downtrend. But look at what happened afterwards. Remember, this is Solana versus Bitcoin. So a 300% move in Solana versus Bitcoin, while Bitcoin is also going up in the same period, generated huge gains on Solana USD. And so again, it's just another reason, another example of why this descending broadening wedge is one of my favorite patterns. So just to wrap up, just be careful with patterns. You will see charts like this all over X. And more often than not, the failure rate on patterns that everybody can see, that a 5-year-old could draw, is pretty high. And so they're not useless, but be careful. Remember principles of risk management, profit taking, and remember that at any stage, the pattern can be invalidated and price can just absolutely plummet and take out all of these longs here. So the key lesson for me is just remembering that patterns have a role to play. They can be useful, but they are not foolproof. that many people will be overly optimistic when trading things like symmetrical triangles or head and shoulders. The best patterns are the ones that are slightly harder to spot, and there are some that have got a much higher hit rate, particularly on the higher time frames. And my personal favorites are the clearance thrust, the bump and run, and the descending broadening wedge. Now, all of these have their flaws. These, personally, I have found to have a much higher hit rate than something like a symmetrical triangle, but they are certainly not without drawbacks, and what they give you is entry points and clear invalidation. They are not a crystal ball that allows you to see into the future. So risk management is still really important, and remembering to manage your emotions and not get greedy if price moves in the direction that you were hoping it would. So I hope some of that has been useful. We will bring more videos to you on technical analysis in the coming weeks, and in a few days' time I shall drop another video looking at the current state of the market. If you've got any requests that you would like to see me chuck into these in the future, then please do drop them in the comments. Please do hit the subscribe button and like if you have found any of this useful. I really appreciate all the support that you guys have been giving me. I'm still a small channel and hoping I can grow to bring you more content in the weeks and months to come.